Right, so we're going to jump straight into the charts today. Before we get going diagnosing, the best type of trades for us with our strategy, who's had a winning trade this week? Anyone put anything on from this strategy that's hit profit? Anyone in blue? Anybody in blue? Anyone catch Ian's in blue? Yeah, I think you're half a Smurf, mate. You're always in blue. Anyone catch USD Chef on Monday? So I'm looking at it now. This is a new pattern. Anyone catch this on Monday? Yeah, Luke did. Nice one. Okay, cool. Right, so just a quick reminder of what the harmonic scanner does. So it is an algorithm, just to remind everybody, it spots reversals in the market. Yeah, it does all the hard work for us. So why I'm an advocate of this strategy is I don't want to be spending all my time finding these pinpoint entries when this system does it for us. We know it's best on the hour. We know it's best on hot forex. Yeah, there's all these different, you can have a look through these. I sometimes, if I'm, feeling adventurous, I'll look at GBE. So hot forex or GBE, but that's come from months of testing out all these different brokers. Why the brokers bit is so important is the patterns look slightly different for different brokers. But they'll usually have the same currency pairs, but the prices of entry and prices of take profit and stop loss will be slightly different. Forex is the closest to our broker. Also, there's less manipulation on the candles. So when we're looking to get in on our strategy, we need a flat candle. We'll get more confirmations on hot forex. So that's why we use hot forex on the hour. So I'm keeping a BDI on USD Chef, which looks like it's now gone. Okay, cool. So a reminder of why they go. When the market has shifted and it's now no longer valid, so that it just keeps pushing up and up and up and up and up. Be interesting to see what it does now, but it's now not a harmonic scan. So we just look for the next one. There's not been much cooking this week, to be fair, from my strategy's point of view. There's been, a few things going on with like GJ and the yens, the EJ as well. Some of you took GBP AUD, so big up to you that did that. This has got a huge TP3, so if we look back, arguably short term is an uptrend. As we zoom out further, I think overall's in a downtrend, so it's kind of in the middle of two trends. So just be careful on that. Sort of TP3 would be a good place to take out most of your position. But let's go through the strategy. I want to go through it step by step. I want everyone just to train their eye. I want everyone to just really hone your skills. So when you're looking at a trade, you start to see what I'm seeing. You start to enter the market like I do. And you can also watch Manny in the week. He wasn't on today for some reason, but he trades it slightly different, which I will cover in a minute as well. But I just want to run through our strategy. So it's called Scanner Source. It always starts on the harmonic scanner, on the hour, on hot forex. I'm going to use NU, which that was a couple of days ago now, last week. So the first thing we do, remember, is we zoom out. So the reason we zoom out is to see the overall market bias. So is this in an uptrend or in a downtrend? So for me, again, this obviously, to my eye, looks like an uptrend. Yeah, from low to high, and the scanner gave it a buy. Yeah, so tick. So this is our entry. Anyone else's patterns keep appearing? Very frustrating. So second, we then look to see if we're at market structure. So we're at a place of commonality in the market. So we grab a rectangle, not too scientific. We're just looking at a zone that has price been to this zone before. It's a little bit scrappy around the X point, but we can certainly see that it's passed through or bounced off this area many times. So happy days. But if you want to get super, super detailed with your confirmations, we talked about fib levels on a previous video. So between X and D, we've got the fib level of an 81%. And then between B and D, we've got a 1.19, so nearly the 127 extension. So we know they're very good reversal points and what the scanner is really built on. So happy days. So we are now keen to look at this. Guys, just chuck a 1 in the chat if you are comfortable with divergence. Are you comfortable with divergence? Fiona, is that an ish? The one question mark, is that an ish? I guess that's an ish. So divergence is simply where the market's going up. You want to see the awesome oscillator from the same points going down. So I'm just going to check this one to see if there is divergence, which is, it's just like a sweet spot. There's divergence in the market, then better. So between X and D, this line is kind of going down very slightly, and it's quite obviously going up. So it's not as obvious as I'd like it, but looking pretty good. Yeah, nice pretty much. So if you get divergence, you're just looking for between X and D is the oscillator. So the lows on the oscillator, are they doing the opposite of price? If they are, great. If you're not too keen or familiar with divergence, Manny's got tons of videos you can go back and watch. And we'll do a session as well if you want, just on like focusing on loads and loads of examples of divergence. But whenever there's divergence in the market, it will reverse. It's just a matter of when and for how long. We can go through it in more detail, no problem at all. Okay, so at this point, we're on the hour still. We've got the pattern, we've got structure, we've got uptrend. We make sure that the DC channel's been hit. The D point has hit the DC channel. Here we go. So entry on the scanner, DC channel. Bingo. Right. So we're now just looking for entry. That is it. We've qualified the scan to being something that we want to enter. All we're doing now is we're waiting. This is when patience pays. We're just waiting for all of our confirmations to line up. So we drop down to the 15-minute. So we've done this many, many times now. What's the purpose in dropping down to the 15-minute? So why do we drop down to the 15-minute? Work out risk rewards, yeah. Identify risk rewards, yeah. So, yeah, you're on the right lines. The reason sorry, this is bugging out. What's going on? The main reason we get down to the 15-minute is we get the early entry. Okay, I'm going to go to trading view. This is. So they're updating the scanner in the background for the new update. So it's being glitchier than ever. Right, bear with. Here we go. Oh my days. Right. going to focus specifically. Perfect. Perfect. So we're looking at the harmonic scan. Bingo. All right. Oh, nice. Guys, I'm having a moment there. Yeah. Well, like Manny, do you know what he's like in his videos sometimes? Get anything to work. Not saying that I'm Manny. Bingo. Something like that. So from this D point, we're looking for entry. All we're looking for is getting in the market. So let's have a look. We drop down to the 15, all the confirmations. So we're just looking to now get in the market. So first thing we look for is the confirmation candle. So in a buy, I know you guys know this, but we're looking for a flat bottom where the blue line, so the 4 McGinley, cuts through the candle. All right, so this one here is the first flat bottom candle. But when we look down, the AO is blue, so that's good. Blue's on top of red, not bad. But the DMI is not ready. Yeah, does everyone agree? So we move on. So that's not ready. So let's put a line. So we're looking at this candle being our first entry. So this happened to me on USD Chef on Monday, but can you see this is very close to like the second entry? It's like a couple of candles away, but you're not to know. So here we go. This is our first entry. We simply, okay. So do the entry candle zone, which is the bottom of the flat bottom to the top of the wick. And anywhere in this zone, we're safe to enter. So if we miss that one and it pulls back in, as soon as we get confirmations again, you can enter safely. But let's say we were on top of it, we're happy, we're waiting for the candle to close, we're working out, okay, where's our risk going to be? You know, let's be super, super safe under the lows. Then we know TP3 would be C to the top of I. So we have a risk reward of 4.1. Yeah. As the candle's closing, we're making sure we've got blue, blue, blue. We've got the DMI above. We've got the blue on top. Blue bars on the AO. We're good. So that the 15-minute is the early entry, and that's the first time it's triggered, which is at 5:30 on the 17th. Yeah. So we work out our lot size. We calculate our risk. So we're going to do, I don't know, let's just put 1%. 1% of our account we're risking to make 4. Yeah. Area. Okay, cool. We're in the first one. So what we're looking for next is the second entry. So I'm just going to shrink this right out of the way. That second entry is when you all, again, all know this, when the 4 crosses the 20. Yeah, the 4 crosses the 20 is the second entry. So you can make sure that everything else is lined up. So you wait for that candle to close. So you'll be entering on this candle. So you've got blue, blue, blue. The DMI is still above. So you would just put your second entry in here. Let's again be super cautious. Use the same stop loss. Could come just the other side of the entry candle zone if you wanted the the best risk reward. This is all preference. This will come with hours and hours of practice and journaling. With the pro entry that's going to come on the scanner, the invalidation zone, which is a stop loss, is going to be about 4 pips outside of the entry candle zone. That will make your risk reward shoot through the moon. But let's just be safe, and we'll put it down at the low. So we've got 28 pips. The reward's going to be a bit less because we're a bit higher in price, but the same TP. Still nearly a 1 to 3. Yeah. So nearly 1 to 3. So we're now in twice. We've got 2% of our account at risk. Here we're going to make 4% if it hits TP. For argument's sake, we're going to make 3%. 2% risk, 7% gain if it hits. Yeah, everyone with me on that? Pretty. So you then get the red. Happy days. No one's, you got a nerve, but everyone's fine. We're then looking for the third entry. So the third entry, as you all know by now, is when the blue line, the full McGinley, crosses the 50, which is the red. So quick show of ones. I don't know if that's the saying or not, but who watched his indicator masterclass? From last week. So it explains about the McGinleys and what they are. They're basically floating support and resistance. Yeah, so the market is attracted back to these areas. The higher the time frame and the higher the amount of bars that it's over, the more momentum. So that's why it's so crucial to wait for these to cross and the candle to close before we get in. Crosses here in between this candle and this candle is closed as it's crossed. Yeah, we do have a red AO here, and we do have. I think we've got blue on top. No, we've got red on top. Personally, honestly, when it crosses, I just get in. I'm happy to get in. So third entry from the top of this close. I'll do the TP in a minute. I would be very surprised if I was using a stop loss down here for this one. I'd probably be looking at structure, so probably below this low. But let's go safe and let's go the other side of the entry. So we've got 17, 18 pips. Now, who can remember what our target is for the third entry? Anyone remember? Any of you that love fibs? Might give you a clue. Any ideas what our third entry target is? So we've been aiming for TP3 on the scanner, the first two. So the 618's here. So remember, if we're in an uptrend, we're expecting it to break the previous high, so go higher. Yeah, because we're trading with the trend, so we should break the high and go and make a new high. So we aim for the 127 extension. Yeah, everyone with me? Got any questions along the way? Just come off mute. Just jump in. So again, we're looking at 1%. And what's our risk reward on that? 5.7. Let's call it 5.
So Chris.
No.
Oh mate. So it's a good refresher. Chris, the second and third entry that you just said then, obviously your opinion, you would, if it's obviously going as it should, you would go in as soon as it crosses. Do you look at the DMI or the AO or?
Not normally, no. So I just wait for the candle to close after it's crossed.
Yeah.
So as soon as you see it's about to cross, the candle has to close. Otherwise, it might not cross by the time the candle's closed and just bounce off it.
Yeah.
So as soon as it's crossed with a closure of candle, you're good to go. Okay. You're good to go. So don't forget as well, with us entering on the 15-minute, we're getting in like before the 1 hour is normally triggered, like on all three.
Yeah.
So I'll show you what I do to manage it as we go through. But yeah, as soon as it crosses and the candle closes, I get in. You can look to line it up with all the indicators, but 9 times out of 10 it will line up. So I've just, again, after I just send my connections on still. Can you hear me?
Yeah.
Yeah, I just wait for the cross and the closure, and I'm in. Yeah, okay. I'm in. Right, so we know the result of this one. We know that it would have hit all our TPs 2 days later. So it would have hit all of our TPs here for 1 and 2. So it would have been up 7% in one of our trades. The morning after, or the following morning. And then TP, the third one, would have hit lunchtime after that. So, like when I was talking to everyone, that video I put in the group about trading less, like less is more, like picking the right trade. There hasn't been a setup today, so I've not traded. I watch, as you know, I watch Luke Longmire. So he's drilled that into me just from being very, very picky. Like, it's really hard to build your account when you're trading a lot, because unless your win rate's like 90%, which is like, it's really hard to be consistent because you'll just knock out all your wins with a couple of losses. So this is why this is real powerful, because like I know all of you are working, or you've got busy lives or whatever. And don't we all? If you miss the first one, you've got the second one. If you miss the second one, but you caught the first, you've still got the chance to get in the third. So you've got 3 entries per trade. But that's insane. There's not any other strategy out there that I know of that gives you more than 1 entry per trade idea. So yeah, look, this is the one that I like. The one that you've all been learning. It is the one to give us freedom, because you're not on the charts all day, because it starts with the scanner. If you had taken all 3, you're up, what's that, 13%, 12%. To pass that funded account test, you need 10%. So you could have passed your test in 2 days. Yeah, that's the power of being picky. Got to be picky. You got to be choosy. You don't want to chase every trade, just the ones that line up. So that's why that I've been like myself too, like sensing frustration, and not like it's just a keenness to trade, but where it's not ready. Like we're paid to literally sit on our hands and watch. Like you might think, right, well, I'll just nick a quick 20 pips, or I'll nick a quick 30 pips, but your stop loss has to be 10 pips to make it worthwhile. So unless your entry is like super sniper, you know exactly what you're doing, you know, it can have a 10 pip move into drawdown easy, you know. So that's what Manny does in his live sessions. He's looking at 20 to 30 pip profit from, you know, all sorts of, like, he's got like 5 strategies that he's looking at every time he trades, like blackjack, triple fire, multi-fire, scanner source, pro entry. Like, the guy's been doing it a lot longer than all of us. So he doesn't necessarily explain every trade he's taking because he's looking at so much. So he'll look at like 20 pip scalps, 30 pip scalps. This is more of a swing, so you'll be holding it overnight. And that's cool. 12% in one trade. Happy days. Happy. So what I want to show you as well is the power of dropping down to the 15-minute. So I'm going to keep all this on here. This might get a bit messy, but bear with. I'm going to jump into the hour. Now, I want you guys to pay attention to, like, obviously these are where we're getting in, yeah, on the 15-minute. So let's see where it all lines up on the hour for the first entry. So this is where we're getting in first, second, third. So that if we just track the DMI, so there's the first one. Right, here's the first flat bottom on the hour. We're already in twice. Here's the first flat bottom on the hour. Okay, AO's there, Stotch is there, DMI's guessing there, but the black line's not above. The first time it's above the 40, we haven't got a flat bottom. Haven't got a flat bottom. Okay, we get a flat bottom here. We would have entered on the hour about here. We're already in 3 times on the 15-minute. We've done all of our entries. So this doesn't always happen, but on this one too, as soon as it triggers on the hour, it takes you straight into drawdown. All right, it triggers the second entry here. Okay, we're already in, we're in profit in 3 trades. It triggers, look at that. This is, they call this the 50. 50. Did it cross? Yeah, look, that crosses. Throws everyone into confusion on the hour and then drops again. But if you had a stop loss that big on an hour, your risk reward is going to be rubbish. So let's do it. So it crosses, you enter at the close of the candle, which is going to be here. Your target is going to be the 127. So roughly here. And your stop loss would not got stopped out. You know, let's say we do the same stop loss as our third entry. You've got 41 pip stop. So it's less than a 1 to 3, it's less than a 1 to 2. So when we're talking risk reward, 15-minute, when it all lines up, honestly, it's the only way to go. The only way to go. Does that make sense to everyone? Everyone get that? Like, drop to the 15, we get better entries, we get better risk reward. Yeah.
Chris, can I just ask, in order for you to go get the second and third entry, are you then expected to, I can see myself just literally on my phone, looking at it, thinking, oh, you know, when's it all going to line up for a second and a third entry? Or is there like a certain time frame that, you know, okay, the second entry will come around this time, the third one will come around this time?
Okay, yeah, I get you. So after I've entered the first, like, I'll just spy like where the 20 is. First entries, and I can see that I'm miles away. So these are all 15-minute candles. So this is hours. So I would, you know, if I'm being like super on it, like every 15 minutes, I'll check it. Obviously, that's not realistic for everyone. So just try and check it when you get a minute. So you know you can get TradingView on your phone. Yeah, so you can literally just check it on your phone. It takes like 30 seconds. Crossed, you can enter on the go. But if you miss the second one, you know, you've always got the third. So ideally, like Ian's just asked, do you always put 3 trades in? That's my aim, because I want to enter 3 times on every position. Oh, sorry, here we go. But if I miss one, I miss one. Like, I'm not too fussed. If I'm living life and I'm out, or I'm, you know, working or whatever, you miss it. But yeah, I'll just be like say on this one, Fiona. So this triggered the first and second entry within like a couple of candles, so you could almost sort of see it coming. So you might, what I've done before is where I see this coming, I'll just wait for the second one, put 2% on the second one. So I'll put the 2 trades in one. It's totally up to you. Totally up to you. But normally it's more spread out, so you get like the first, second, and third. But these are all sort of triggered within like 10 pips ish of each other. So that's why the risk reward on this one is good, really good. If I don't think there's any other examples recently, but you know, like, you know, recently obviously I failed my latest test. Like, I made up a strategy halfway through my test. Like, I didn't stick to the plan. So the reason why, like, I'm over and over and over with it with you is to also help me. But I don't want you guys to fall for the same things, because I've already done it. I've already proved it's not a good idea. So like, again, a couple of mentors that I follow, that they speak about like mastering one punch. So they're just like talking about mastering one thing, doing it really, really well. And yeah, with the scanner source, you'll probably be trading less. You're not going to be trading every day, probably. There was the back end of last week. I forgot the pairs, but there was like 3. I think there was like 3 pairs going on at the same time, which is rare on an hour, where it was all with the trends, all the support. You know, capitalize massively on those moments. But there'll be days sometimes where there isn't the right setup, and that's okay. That's okay. So when we talk about routine, you know, think about when you're able to trade. I'll check in the morning. Like this morning, there was nothing. I literally spent 10 minutes on the charts. There was nothing. So switched it off. I did some studying, did some other stuff, and came back to it at New York opening. So that's the USD Chef, which was now gone. That was looking really nice, but it's broken the fib extension, so it's not now a scanner pattern. But the higher it goes, the quicker it falls. So, you know, I'm going to keep my eye on that. But that is it, guys. That literally, that's the strategy. I know when you first start, that looks daunting, but I think now, where many of you have been practicing, been doing it over and over, you know, it all makes more sense, I guess. Seen it time and time again, been through it. From the one-to-ones I've had with some of you, you know, practicing the first, second, and third entry is the next thing. So I just try and keep it as simple as possible. So when the 4 and 20 cross and the candle closes, I enter. So I don't look at the other stuff, because sometimes it doesn't line up. I don't want it to freak me out or fake me out. So if it crosses and the candle closes, get in. Same on the 4 and the 50. Another tip I've got for you is, right, say we're on the 15-minute, we've entered every pattern. Everything's gone in. We're on the 15. We know we're in early. Just to make sure that the trade is going in the right direction, I sort of come up to a higher time frame. I don't enter, but I just notice, when is it triggering on the 30-minute? Like, when is it triggering on the hour, the first entry? I just make sure that I'm, you know, as soon as when the hour starts triggering, that's where you're going to get major moves. Like if you see here, like the first one triggered here, the flat bottom. Okay, it gave us an initial pullback, but it had already been going up for hours. So it's due a pullback. It's not just going to go straight up. Very rarely going to do that. But if you held it, when the 4 and 20 crossed it, you get that injection up. It then bounces off the 50. When the 50 crosses, look, real spike, and then see you later. So the 15-minute, you don't get always the most momentum. It doesn't always go like flying 50 pips into profit. When we're looking at it triggering on the hour, we're already in, but then that just makes me relax. I'm like, right, the first one's triggered on the hour, sweet. I'm already 30 pips up on the first one. The second one, like I'm at broke even, or you get those chances to manage it if you want to, or you can just set and forget. That's the hardest one, set and forget. That will test your metal. But it's, you know, whichever way you want to do it. You don't really want a winner turning into a loser. But you do get tapped out more often than not when you're at break even, but you are protecting your account. So there's twos and fro's, pros and cons. Yeah. So a bit of a recap, really. We've been over it many times. We've been through it, you know, for weeks, individually, as a group. How's everyone feeling with it? Is there anything that anyone wants to, you know, clarify, go over again, about in more detail?
Can I ask another question? You know, when you said the waiting for the second and third entry,
Yeah.
you don't look at the other indicators, but as soon as it crosses, you get in. Does that also count for the candle as well? So if by chance the candle now has a wick on it or turns different color, do you just say, no, I'm not going to do it? Or you just still do it because you had that first candle, whatever?
Yeah, so say right now it's just closed, it's just gotten quarter to 9. So it just closed now with a cross, I'll get in. So even if that candle then turns red, obviously a lot can happen in 15 minutes. It could close blue still. Yeah, as soon as it's closed with it crossing, yeah, I'm in. Yeah.
No matter what you see next.
Yeah.
Okay.
Yeah. I know it's scary, but it's
Very.
it's just simpler. It's just way more simple, because I used to wait for it all to line up, and like I said, 9 times out of 10 it does all line up. There are the occasions where you'll get like a red AO and it's triggered, but remember the indicators are slightly behind price, so it might be the next one and it'll just give you a slightly worse risk reward, but you could always wait. There's no harm in waiting. But honestly, I cross, close, I'm in, and then that's it takes all the guesswork out of it. All right. Now, from the analysis that I did with my test, my scanner source trades, they were around 65% successful. So if I'd just done the scanner source trades and not tried to rush, which, you know, I've been open and honest with you all about, I would have passed. Be very close to. I would still be in the game. I wouldn't have failed. So honestly, it's all about just being patient, practicing, waiting for it to set up. And if you're looking at charts and you're kind of thinking, well, I need to practice and there's no available scans, then maybe try a different broker, but journal it. Like, maybe don't enter it, especially on live. Maybe enter it on demo, but like try FX Choice, try Hugo's Way. Most of the time they've got the same anyway, but there might be a couple where there's different things going on. But just try and train your eye to stick to with the trends. You know, all the stuff we talked about with the trends, at support and resistance. If you know how to do divergence, add that in. Yeah, it's just about repetition. But you see, like on that one, 12% in one trade. You've passed in 2 days. So that's what I need one of them coming up this week. That'd be nice. Yeah. So that's pretty much it. But trading should be simple. Trading should be, you know, all about honing your skills now. Like I've talked to a lot of you individually that there's so many like options and opportunities to learn different things. But again, in that video, I sort of showed you all like what happened to me. Mastering myself, mastering like my psychology is way more efficient than mastering 7 strategies. The reason why I failed is because I failed. The strategy didn't fail, it was me. So yeah, just keep doing what we've said, going over and over and over. Practice on demo, try it on live if you want to, but just keep the end goal in mind. You know, when we're funded, we're making 10% a month. You know, it's life-changing money. If you're going to apply for the top account, you know, 70 grand on FTMO, you know, you're taking home 5 grand a month. You know, sat at home, you know, it's good money. No one's going to grumble at that. So, yeah. How are we all feeling? How's everyone? Luke, you've been very quiet. Are you happy? You good, man? Yeah. Can't see Eddie, but Eddie, you good? Eddie's happy. So Ryan, you're back to trading now. I know you've had a busy time with the kids and homeschooling and all that stuff. It's a bit of a refresher. Just reach out to me, mate, if you need any, you know, any pointers or whatever. You can go over a one-to-one. Manny should be back on tomorrow at 3 p.m. But it's all just about practice. Like it's just practice.
Chris,
Yes,
just looking on have you got your scan, your harmonics open, or your trade? You can put it on trading view anyway. If you look at GBP odds, what would you say that would? Obviously, go with looking at the trend. What would you? Because when I zoom out,
yeah,
sort of go, it's sort of at high, then it looks like it's gone to a low, and then it looks like it's coming up again.
You're trying to identify the trend.
Pardon?
You're trying to identify the trend.
Yeah, because this one came up the other day, and I know a couple of the people got on it, but I saw it as going the other way, which is why
I didn't trade it.
Yeah,
I didn't trade it. So a good way to identify the trends, if you get a trend line, beef this up and stick it at the low, and obviously you're just connecting the dots, but if you connect the first time it hits and just drag it out.
Oh yeah, of course, yeah. Like Manny used to do on his.
Yeah, so that was an uptrend, which is now broken.
Yeah.
It looks more bearish than bullish.
Yeah.
So also, like you said, like if you zoom out, you know, you can do the same. This is why I didn't take it. I was a little bit confused, to be honest. If you do the same on the downtrend, broken, you see it's in like complete confusion. Like, what's it going to do next? Like, it'll be very interesting to see what it does when it approaches this line, especially because buy was called around here, so it's been like a good. There's a lot of pips in GA, but if you look at this area here, look, you've got like really good structure point and this downtrend, this historical downtrend.
Do you think it's going to bounce off and then come back down? Just initial, it's broken.
Yeah, so the one thing I can see is it's about to cross. So it's either going to bounce off the 50,
yeah,
or it's going to break through. If it breaks through, it's more likely to come to this area, and then I'll be looking at a 15-minute confirmation of sell.
Come down. Yeah.
But that's kind of reverse engineering the scanner, which is cool. Like we talked about that on a previous session as well. There are more opportunities out there if you know how to do that. But this one, I didn't buy it because I was more interested in the sell. So I think like the 618. Let's have a look.
So that one's take it higher, doesn't it?
Yeah, the 618 is up here. So if it gets up here, you know, who knows what it's going to do. We'd have to then look at, yeah, it just wouldn't be crystal clear. So that's why I stayed away from it. It doesn't, I like it, do you know, that NU when it was just straight up.
Yeah.
There's no confusion. It's like, you know, definitely in an uptrend. So, yeah, it'd be interesting to see what happens. Like it should, I know it's an exotic. So overnight, obviously Tokyo and Sydney opening, it may hit these zones overnight, but it'd be interesting to see where it is when London opens tomorrow. But yeah, that's why I didn't take it, because the market is about to make a move. There's 100 pips where it is now, so there's a lot of pips. Yeah, a lot of pips. Oh, so any more questions? Anyone know Tyrone Foster, the DeLorean educator? He's a bit mad. He says we're paid to wait. Patience determines our profit. So a lot of the time, be sat watching your hands, like, right, I can spot a good scan. I just now need to wait for it all to confirm. That might be tomorrow. It could be tonight. You know, we've got. Cool. All right. So, unless there's anything else, I don't. How do these hours go so far? It flies by. Unless there's any other questions, queries, anyone concerned about anything, we can call it a night. Cool. Right. Well, I'm going to play you out with some more I Am Master Academy R&B. And just message me, guys, if you need anything or if you want to book it one-to-one. Fiona?
Thank you.
You're welcome.
I probably will be asking for another one-to-one.
Yeah, do it. Let's do it. Let's do it. All right, guys. Well, have a good night. Thanks for swapping again at short notice. Tuesday, and I'll see you all soon.